Welcome to this week's look at the state of the New York City real estate market. This report is for the week of November 27th to December 3rd. We're going to get started with the luxury market, then I'm going to move to the Manhattan market and then the Brooklyn market, and then I'm going to sum it all up and give you my thoughts and my takeaways. There were 17 contracts signed last week in the luxury market. As a reminder, the luxury market here in Manhattan are for properties that are priced at $4 million and above. 4 of those properties were in the trophy category, meaning they were priced at $10 million and above. 11 were condos, 2 were co-ops, and 4 were townhouses. 11 were uptown properties, and 6 were properties that were downtown. The number 1 contract was a limestone townhouse at 10 East 75th Street. It was asking $23.5 million. It was listed at the end of September. It is a 7-story, 19.5-foot wide house. It has 10,463 square feet. It includes 6 bedrooms and 5.5 bathrooms, plus an elevator that goes to every floor. The house has some very beautiful features, including very dramatic staircase and a landscape roof garden. The number 2 contract was Penthouse 1 at number 1 Northmore Street. It was asking $20 million. It was reduced from $30 million when it was first listed back in June of 2022. This is a penthouse. It is a quadruplex, and it has 5,500 square feet interior and 2,050 square feet exterior. This is a condo with 3 bedrooms, 4 bathrooms, and 2 powder rooms. On the top floor, the roof terrace features a 21-foot infinity edge pool, hot tub, outdoor shower, plus a 90-inch television screen and a full kitchen. A storage area in the basement can hold up to 2,000 bottles of wine. This is a building that is quite small, with only 6 units and no amenities. It should be noted that the seller paid a little over $8 million for this property back in March of 2012, so nice little profit there. If we take a look at the stats for last week, the total weekly asking price sales volume, $150,564,000. The average asking price, $8,856,706. The median asking price, $6,575,000. The average discount from original ask to last asking price, 12%, and average days on the market, 458. Okay, that is it for the luxury market. A few more contracts signed than the previous week, which was Thanksgiving week. We're starting to see a little bit of an uptick, which is good. We're going to continue to keep an eye on the signed contract activity for the luxury market. If you have any questions, please post them below. Now we're going to move on, take a look at what happened last week in the Manhattan market. So we saw a real pop in inventory last week. 224 properties came on the market, kind of surprising, up almost 191% for the week. We also saw a little pop in contract activity. 145 contracts were signed for the week, up 16%. Off-market properties also rose 322, up over 110%. If we take a look at the 1-month look, which is perhaps a little more of a telling story, for the month, we saw the supply 825. That is down almost 50%. Contracts signed down almost 17%, 664. Off-market properties rose 34%, 937. That's a little more to be expected this time of year. As you can see from the market pulse, we are definitely continuing to be in this buyer's market. We are down over 19% from last month, although we are up a bit, 5.5% from last year. The liquidity pace chart shows this number of contracts for the last 30 days, 664, down 4% from last year. This November was the quietest November going back to 2015, and it ranks among the slowest of the last 20 years in terms of contracts signed. If you take a close look at this chart, you will see how this November has stacked up against other years. And if we kind of take a little peek at Q4 for 2023, the data is still coming in, but what we're looking at really is kind of a forecast that is showing how this extended period of being in this kind of downward low liquidity market is putting pressure on the prices. The early Q4 data is suggesting that we're down median price action standpoint across the board somewhere between 8 and 10%. That, of course, depends on price point. And so the properties are priced at under $1 million. It could be a little more of a discount. For those properties priced over $1 million, could be a bit less. Okay, that's it for Manhattan. Any questions, please let me know. You can always reach out to me at Sotheby's as well. We're going to move on now and take a look at what happened last week in Brooklyn. Interesting, in Brooklyn, we also saw a little rise in the supply for the week, 154 up, a little over 108%. Contracts signed also up over 80%, 119. Off-market also rose, 124 off-market properties up over 125%. If we step back and look at that 1 month look at Brooklyn, we see a very similar picture to Manhattan. We see the supply is down almost 41%, 583. Contracts also down over 15%, 462. Off-market down almost 20%, 314. Just as with Manhattan, Brooklyn is also looking at buyer's market. We are seeing a drop over 8% from last month in the market pulse and down 1.1% from last year. This liquidity pace chart for Brooklyn is showing a 30-day moving window of contract activity at 462, also kind of low, down almost 13% from last month and down almost 9% from last year. So I'm going to share two charts with you about Brooklyn. This is going to be very helpful to those people actively in the market, whether they're a buyer or a seller, but probably most particularly helpful to the sellers. This first chart has to do with the neighborhoods in Brooklyn that are struggling to sell. So if you have property that is currently on the market in Bushwick, Crown Heights, downtown Brooklyn, Flatbush, or Greenpoint, you may have noticed that you're perhaps struggling a little bit to get your property sold. Whereas if you have a property to sell in Brooklyn Heights, Carroll Gardens, Park Slope, Prospect Heights, or Williamsburg, you may have found that you had a fairly easy time, if you were priced properly, to get your property sold in this market. So Brooklyn, your listing success or struggle is very much dependent on your neighborhood, which is a little different, very different actually than Manhattan. This is an interesting chart and hopefully helpful to those who are active in the market. Okay, that's it for Brooklyn. Any questions, please post those below. I'm going to move on now, give you my thoughts and takeaways. We saw a slight rebound in the luxury market. 17 contracts were signed. 4 of those were in the trophy category part of the luxury market. The rest were for properties that were priced at $4 million and above. There were 11 condos, 2 co-ops, 4 townhouses. 11 were uptown, 6 were downtown. So after Thanksgiving, we saw a little bit of a pop. Be interesting to see if that continues and for how long the luxury market continues to ride a relatively strong wave. If we look at the Manhattan and Brooklyn markets, they're somewhat similar, somewhat different. The supply in both markets is down. This is to be expected at this time of year, although we did see a little pop in both of those markets last week. However, we also saw a bit of a rise in the off-market properties. The demand has slowed, although in Brooklyn we saw a little bit of a pop. Manhattan, not so very much. As I mentioned, in Manhattan, the November monthly contract activity for properties priced at less than 2 million is the slowest since 2014. And as I also mentioned, the Brooklyn listing success is very neighborhood specific. So you Brooklyn sellers, be super careful when you are pricing, because if you're in those neighborhoods that are affected by these, let's say, more sluggish sales, then you want to be really careful about your asking price. The price action, again, we're waiting on those Q4 numbers, but the early data is showing the median listing discount to be averaging between 8 and 10%. It again depends on your price point. If you're under $1 million, you could be looking at bigger discounts. If you're over $4 million, perhaps less of a discount. It really just depends on your circumstance, on your property type, and also on your price point. Sellers, you are definitely up against it. The buyers definitely have leverage right now. We are absolutely in a low liquidity environment, and we have been for a while. We are kind of bouncing around, and we do have buyers in the market, but they do know that they have leverage. And so this is a struggle for you if you want to continue to be on the market, because there are buyers right now. Be sure that if you are not getting the activity you want, make your price adjustment. Try to engage the buyers that are out there. If you feel like you've had enough and you want to sit it out for a while, you can always take your property off the market, regroup, come back on in the spring. Yeah, early spring, mid-spring. Don't wait too long. March is your best time, really. But we don't know. This market could start a little early. We'll have to wait and see. Buyers, this is it for you in terms of inventory. You might get a little bit more. As you saw last week, we got a little more inventory, but for the most part, you're looking at your choices available to you. This is probably a bit frustrating to many buyers. However, there are some great opportunities. So if you see something that you like, make sure you take advantage. Probably doesn't get better than this in terms of opportunity. This is definitely your market. Okay, that is it for this week's look at the state of the New York City real estate market. As always, my thanks to Urban Digs and to the Olshan Luxury Market Report. The work that they do helps me to help you to make great decisions. I'll be back next week with the very latest news on what is happening in the New York City real estate market. In the meantime, take care.